Hi, this is Brandon from Galaxydoc Market. Today is May 14th, 2024, and I'm going to present to you my next earnings kind of preview and how to trade Monday earnings, which is on May 15th, 2024 pre-market. So here is the disclaimer. Pause it, read it. If you agree, please move forward. So one thing that I'm interested in Mndy.com is that this is a very crowded project management platform in the clouds. And the competition is fierce now, partly because a lot of the companies are cutting back on their expenditures due to inflation as well as slowdown in the economy. While you may not be able to see that based on the market action right now, and that's another topic for another day. But you just see that the market is trying to be rescued ahead of the CPI number. Now, PPI numbers came out, and basically it was hot. Okay, and so Fed is in overdrive right now trying to rescue the markets, which is what's to be expected at this point. But the real driver is going to be on the consumers because why? Not only have I been harping on the fact that the consumer demand destruction is ongoing and very, very real. If you haven't seen on the Home Depot's earnings report, there is a massive slowdown that is afoot. Now, Monday reports earnings on May 15th, 2024, and in the pre-market. And so let's do a quick dive into how the earnings have fared. So in the Q4 on 2/12/2024, they beat earnings. Okay, the estimate was 32, and they reported 65 cents, which is a beat. Okay, and let's see how they responded as far as the stock action. Okay, so and then they beat on the revenues, and so they're basically beating, and they've been beating all the way down into these earnings periods. Okay, now the question I have is what happens if they miss on the EPS or on the revenue? Okay, they did miss once on the revenue side, and I think it was right here on the 11th, 13th, but it really didn't matter. It did create volatility, and I'll show you. This is a very tricky stock to trade, but if you know that the market is going to treat this and whip it around a bit, then there is an opportunity to trade on the upside and the downside. I'm not quite sure, how we're going to be responding to the earnings. They could, for all I know, they could beat both EPS and revenues, but we are in the sell the news type of environment as well. That if it misses, it will get severely punished. Okay. Now this stock has been sort of under pressure, but not really. We'll do the technical analysis on it, but let's look at how it behaves after earnings. So basically, what we have is a situation here from 2/12 Q4 2024, just a few months ago, Q4 earnings. So what they did was they reported earnings on the 12th. And so this was the last day. This is pre-market. So basically it gapped down, and then from there it bounced higher, right? And it closed right around here, went all the way up to here, and then it proceeded to go higher. So again, this would have been better if you front ran the earnings, right? Because it dropped, but then it ran up for 4 days, 1, 2, 3, 4, and then it dropped again. And look at this range. I mean, the range is fantastic. And so we got to know our pivots and our levels. And I think this is probably what is going to transpire, even if you got in later. And as long as you know your levels, then we can basically take the opposite side. If it gaps down, you find the bottom and then wait for a bounce, and you will get at least 15 to 20 points to move. And we'll kind of go over that on the options chain, what the expected move is and what my calculated move is. But this is how it behaves. It's a very tricky stock, because you can't just expect a gap and go situation. Okay, now on the 11th, 13th, 2023 Q3 gap, it basically beat EPS but missed revenues. Remember, this is the one I said they missed revenues, but still it gapped higher, and then it opened, right? And then it sold off about I don't know, 6, 7 points, and then it moved higher from there. So this was kind of a gap and go. If you understood the top end, even if you got in here and just held it through for a few days, you got a decent size, like a 10-point run. Okay, and so this is what this stock does, and it offers both short and a long opportunities post earnings. Okay. Now, if you front ran this earnings, okay, to the long side, well, you got a pretty significant, right, into the close. This is where towards the end of the day you got into. You got in around like 140 bucks, and then in the morning it opened around 156. That's a 16-point gain, okay, on the top side. The question is, how extensive is the IV going to be? Is it going to be worthwhile doing that? And that's what we're going to deep dive into. Now, Q2 earnings on 8/14/2023 was another EPS beat and the revenues guidance up. And it really opened flat and then it started moving higher. So it wasn't anything that it gapped down or anything, but it just opened flat. If you see a flat open and, we had it coming down and they beat, a likelihood is that it's going to go run up, and then when it runs up and then you short that pop, okay, there is a 20-point down over the next 4 days from the top, 1, 2, 3, 4, right down into here. So again, it's a stock that can offer you both upside and downside moves as long as you know your levels. Okay, now what happened in the last Q1 earnings in 2023, May 15, 2023? They beat EPS and revenue. So basically, obviously, gapped up, but it sold off right away. Okay. So about 13.5 point pullback. So if it stalls, then you got to take, you don't want to bet the farm on it, but this is an earnings play. You can play this to the downside, and then when it stalls at the bottom, move up. Again, this is a stock that has both upside and downside bi-directional plays in most of these earnings. And then from there, it was a good earnings, and we are approaching the summer months, right? And you can go buy, and this is probably what's going to happen again this earnings season around. Now, the question is if they miss. If they miss, it's going to gap down because let's look at what our options chain tells us so far. This is pre-market. We got 187.59. So they are expecting a pretty decent size move, right? So the premium is pretty expensive. They're expecting a 26.23 move. I expect a bigger move, either to the upside or the downside over the next 2 to 3 days. Okay. Here's the interesting part, though. There's more calls that are open than on the put side. Okay. Even more interestingly, though, but the put sizzle index, if you don't know what that is, go look it up, or I may do another video on it, is skewed towards the put side. So this is misleading right here. On one hand, they have these open interests, but actually the volume over the last probably a week, remember, these only have monthly options, okay? These don't have weeklies, okay? This expires this week, and this is that monthly options expiration week. So things are going to get super wild. It's going to get super volatile, and therein lies the opportunity, okay, both to the call side and to the long side. It would be a great actually candidate to strangle this, okay, but not financial advice. You do your own research. I'm just the messenger here, okay? So before we get into that, let's bring up my technical analysis. Okay, so here is the daily on Mndy.com, and what's interesting about this, and I'll try to be as succinct as possible. RSI is negatively divergent. You know that this basically had its like kind of the head and shoulders formation. You can also say that it's a triple top before it started selling off. So it has been selling off. But the thing is that it's making this descending triangle formation. Either you could do it from this level or this big giant move. So you can kind of see that if we extend that area out, likely target is 162 to 144. Now, it doesn't mean that it can't bounce. This is an earnings play after all, right? But there are significant things about this chart that tells me that, we have these tail candles that's breaking down below the 200-day moving average. Everything speaks weakness. MACD is ready to do a death cross. The histogram is diverging down. CCI is negatively divergent. The stochastics has already turned over. But more importantly, this is the most important part, right? We have PPO ADX crush indicators suggesting that it is in the middle of a major meltdown, right? That the direction is bearish, okay? Now, ADX is basically continuing to show negativeness, and then accumulation and distribution. I mean, people are selling. Look at this, okay? negatively divergent, and they're selling this off. Okay. And then, of course, ATR is towards the bottom of the range. And so, this is where we have kind of this divergence. At the bottom of the range, if the predominant direction, it can continue to go, but the predominant direction here is that if it starts to move higher, then it's basically going to change directions, right? Maybe it does it in intraday tomorrow, but regardless, this is something that is bearish. I mean, this is a bearish chart, descending triangle. We already have our levels marked. Okay, so let's look at what it looks like on the weekly. Weekly continues to show same thing that the daily is showing. It is negatively divergent on the RSI, right? We've got again a descending type of a triangle, and so the measure move is down into this area. Obviously, the volume is coming down. There is nothing here that looks very, very bullish right now, right? Even on the weekly. It has been under pressure. Yes, it basically is trying to recover. It's in this channel. So if it needs to break down this channel and get below this 100-day moving average, I think there's some leg to this. MACD is directional on the weekly. The CCI tried to recover. Now it's coming back down. Stochastics is negative and it just crossed back over. So there's more room to the downside. And then on top of that, very rare, but daily and weekly both confirming on the PPO ADX that this is a bearish move and that there's going to be more impulsive bearish move down. And then accumulation distribution, it was on an upward trend and it broke that yesterday. And then ATR basically at the bottom end of the range. And when we look at that, we're still kind of at that top end of this uptrend. So that means that the trend may break down to the downside. But again, we've been selling off for 1, 2, 3, 4, 5, 6, 7, almost 8 weeks here on this Monday, right? So maybe in the middle of the day or towards the end of the day, we'll get a rescue and then maybe move higher. Okay, so that's kind of what we're looking at right now. So here is what I think. The cloud-based project management apps are saturated with layoffs, subscriptions are dwindling, companies are cutting back on these, right? If the company's not expanding, what kind of project management software is going to be necessary? So Mndy has beat earnings in each of its last 5 quarters, has a very interesting pop and drop with wide range of the first day of the reporting. I mean, it's a both directional play. I mean, I think this is a day trader's paradise. Must have two-way trade potential, right? Daily PPO ADX and weekly PPO ADX signals indicate more downside. IV percentage of 187.59 indicates very heavy premium. You're going to pay through the nose for this, but I think there's going to be at least a 2.5 to 3 sigma move, somewhere between 26.9, what the options chain is indicating, to maybe up to 87.3 points. And the scary part is that I think this is going to happen on both sides of the way. So ideal strike is May 17, 2024 expiration, 170 to 165 strike puts, and then switch directions towards the end of the day when basically it may start to move higher. And I think that may be something that's going to happen. Okay, so I think it's prudent to wait until after earnings due to propensity to jump on earnings and then selling off. But what happens though if there's high probability of earnings miss on deck, right? What will happen? Has it been priced in, or are we going to really pull back before it goes higher? But that's it for now for us. I think Mndy offers very, for those that are skilled, you know your levels. I think it's going to offer you a very, very big range, either to the upside and downside or both. Thank you so much for listening. Like us, please like us, share us, above all, comment, good and bad. If you don't want to comment, that's fine too. Let's get some alpha and subscribe. And if you want to learn more about our community, email me right here. Okay? All right. Bye-bye.